SpaceX is officially public. The rocket company now has a stock ticker, which means you can finally own a microscopic piece of Mars, not an actual rocket. Please stop asking. The IPO raised $75 billion. That is less fundraising and more unlocking the money cheat code. Shares were initially priced at $135. Then trading began. And the stock did what everyone expected, until it remembered gravity exists. So SpaceX is public. Now what actually happens? First, SpaceX is no longer just a rocket company. It is now a public company with rockets attached. Every launch now has millions of unofficial financial commentators. A rocket tilts 3 degrees and someone's phone says, "Breaking, civilization has ended." The mission can succeed. And the stock can still fall, because stocks are emotionally complicated rectangles. SpaceX now gets repriced every trading day. Monday, humanity is going multiplanetary. Tuesday, apparently space was a mistake. Wednesday, analyst says long-term opportunity. Thursday, nobody knows what anything means. Friday, close the app and pretend you're diversified. Another important detail, only part of SpaceX is publicly trading. The tradable float is the small door on a very large spaceship. Lots of demand plus limited shares can create violent price moves. The stock may bounce around like it drank 6 energy drinks. Meanwhile, insiders cannot necessarily sell everything immediately. Investors will watch lockup dates very carefully, because eventually employees and early investors may want liquidity. And liquidity is Wall Street language for "I would now like a mansion." Then come quarterly earnings. SpaceX must regularly explain what happened to the money. Every launch becomes revenue, every factory becomes capital expenditure, and every accident becomes a very uncomfortable footnote. Then executives join the earnings call. An analyst asks a 40-minute question, and management answers using the phrase long-term trajectory. Translation: please stop asking about next quarter. Investors will also expect financial guidance, which is difficult when your products occasionally interact with weather, physics, regulators, and possibly aliens with airspace complaints. Next come analyst ratings: buy, hold, sell, and the secret 4th rating, we honestly don't know. They will build models stretching decades into the future, because apparently Excel has a Mars setting. Options traders will also arrive. Calls, puts, volatility, and several new ways to lose money before lunch. Short sellers may bet against the stock, which is brave when your opponent owns literal rockets. Credit agencies are inspecting the company too. SpaceX has already received investment grade ratings. That can make borrowing cheaper, because apparently the rocket needed a credit score. But buying shares does not mean controlling the company. Public shareholders receive economic exposure, while founder control remains extremely strong. You may own the stock, someone else still flies the spaceship. Then there is index inclusion. If SpaceX enters major indexes, passive funds may have to buy it, not because a fund manager loves rockets, but because the spreadsheet said so. Your retirement account may become a space investor without asking you. Congratulations, Grandpa. You now have orbital exposure. So what should investors actually watch now? Revenue, cash flow, share count, and execution. Not just whether rockets fly, but whether the economics improve. Watch for dilution. More shares mean your slice of the company gets smaller. You still own pizza, just considerably less pizza. SpaceX is public now, and the real mission is surviving Wall Street. Like, comment, and subscribe for more.